Yo, what's up, guys? Good morning, good morning. I guess it's technically the afternoon now. What's up, team? Let me get this thing rolling here. Whoa. Man. I guess I probably should have picked a different color besides green, right? Man, look at me. I look like I look all crazy. I look like one of the ghosts on Pirates of the Caribbean. Let me try to make myself smaller down here, maybe. Oh, well. We're gonna skip forward to the next one. So what's up, guys? Sorry, my green screen's all crazy. Here, I'm gonna skip forward to this next one. That'll be easier to see. There we go, that's better. Much better. Alright, let's go. We got Mitch here, too. Mitch is gonna be going over a few strategies as well, guys. Sound check good? Only through the stream. Oh, my bad, Mitch. I had you muted, bro. You should be able to hear me now, right?
Yo.
There he is. What's up, Mitch? All right, let me get the sound down. Let me get the volume fixed here. Let me know what the sound is like. We got Mitchy Rich in here today. So
what's going on, team?
All right, here we go. Let me turn you up a little bit. There we go. How's the sound work? Let's do a sound check. Mic check 1 2. Music's still going.
1 2.
Yeah, music will still be going. I'm gonna turn it down as much as I can to try to get it a good level here. There we go. That's probably sufficient. All right, is it good? What's up, Dave? You got the stocks from the deposit on Webull? Nice, man. What's up, Dave? We got Sren. We've got Sid. What's up, team? Alright, let's do a sound check. Everything good? I can hear you, Mitch. What's up, bro?
Not too bad. Alright,
let me see. A little bit more.
What's going on, guys?
Alright. How about that? Let's see if that works.
Yeah, it sounded good.
Okay.
I heard myself at least.
Mitch
That should be
seems
fine
loud.
for me.
Perfect. Alright, good. Alright, guys. So, just like last one, we're going to be doing a little bit of a strategy workshop today. I'm going to be going over 2 scalping strategies. Really easy scalping strategies I know really well, and strategies that I've been using specifically this past week in the market. They work really, really well, and Mitch is going to be going over some as well. Just to preface this entire class, we are going to be using Thinkorswim's OnDemand feature, and what that essentially does is it lets you go back in time and retrade any market day you want. So you can basically paper trade any market day you want in the past few years, even beyond that. And so it's a really great tool for traders. If you're like me, and on the weekends you miss trading, you enjoy trading so much you miss trading on the weekend, and you really would love to be able to practice, you can paper trade on the weekends, and you can go back and select the day, select the time, all that stuff, select the stock, and you can go back in time and retrade any market day that you want. It's a great way to practice, and it's actually what we'll be using during this class, just like last weekend's class as well. And so with all that said, we can go ahead and get started. Like I said, sound check, everything should be good with sound, right? Let me know. Let's get a nice little confirmation here with the sound check.
Sir, let's do it.
And then we'll get this thing rolling.
Welcome, fam. Let's do
That's
it.
good. Cool. All right. So yeah. So the first strategy I'm going to be go over is, if you know me, you know one of my favorite strategies is one I call the fake out fade. Now, this past week I've been using this strategy a ton to scalp small 10 or 15 cent moves in the market. And so you can kind of see an example of it here, and then we're going to go over the on-demand version of the strategy so you can kind of see what the thought process is like when I take profits, when I get in, when I exit, where's my risk, and stuff like that. And so the first step of this strategy is you want to wait for a downward trending stock. I prefer to use the VWAP for this because the VWAP is an intraday trend indicator. And so it tells you basically when stocks it tells you what trend on a short-term basis that stock is in. And so if a stock is maintaining above the VWAP, it's technically in an upward short-term intraday trend. If the stock is maintaining below the VWAP and respecting it below the VWAP, then the stock is in a downward or bearish intraday trend. And so I hope that makes sense. That's going to be a crucial aspect of understanding these strategies. And so again, the VWAP stands for volume weighted average price. It is a moving average with volume taken into consideration, but more importantly, it is a intraday trend indicator. So it will tell you that specific day's trend of the stock when you look at it. So you look for once you wait for a downward trending stock, you're going to look for a downward trending move like this here. And let me make sure you guys can see this well. It looks like you can. So you want a downward trending move. As you can see on this picture here, you can see the stock was maintaining below the VWAP. I'm going to fast forward and get you a bigger picture here so you can really see it. So first, what we're essentially doing here is we're waiting for a stock to maintain below the VWAP here. You can see this purple line is the VWAP. We're looking for a stock to maintain below that and push down below that level. Another cool thing I realized I can do here is that I can actually draw. Let me find out how. There it is. So first thing, you want the stock to be maintaining below the VWAP like this, okay? After that, like it says here, let me go back to the previous slide. It should let me, yeah, well, cool. All right, so then once that we have that that stock maintaining below the VWAP, the next thing we're going to look for is an obvious bounce back to the VWAP and a slight break above it. The slight break above it is key here. It can either be a slight break or it can be a big break. I prefer to trade a slight break, but the break is key here because if you look at this, you can see that this gives us a really solid risk level. And so again, we slightly break above the VWAP here. A very slight level, because then we can short and risk off of this level. This is a really obvious resistance point that we can risk off of. And so when the stock gets rejected and comes all the way back below the VWAP, that's when we really have our eye on this type of strategy. And when it actually bounces back to the VWAP on a little bitty basis here, you can see this little bitty bounce to the VWAP, that's where we're going to enter this position. Now let me erase some of this. It's starting to get a little clouded up here. But we're essentially waiting after the stock slightly pushes over the VWAP. We want it to reject and come back below it, and then we want a short-term bounce up to test the VWAP. This is where we're entering the stock here. I gotta change this song. But this is where we're entering this position right on this bounce back, because again, we can risk right off of this level. If the stock breaks this level up here, we can get out of our short position because we're betting the stock is going to go down. And when we short into that, we can have a really nice, easy trade taking 10 or 15 cents off the top. Now, if you know me, you know that this is a strategy that I traded without scalping it necessarily. I would trade it just as a regular strategy, and I wouldn't scalp it. I would usually try to take profits at this low down here. But sometimes that's a little bit too greedy of a mentality, and I think especially when you have a scalper's mindset, taking 10 or 15 cents off of the top with these moves, riding this nice breakdown, can be an extremely profitable way to trade. And it's a strategy that I implemented in the market a ton last week, and it was really successful. Let me catch back up on the chat. Scalp is my middle name. Nice, man. I did yesterday with eBay using years chart, so I don't know the current price and won't develop the wrong bias. I ended up green, 44 bucks. Nice, Tiny. Alright. Alright, so does everybody understand the basic plan of this strategy? And we can go back and look at the actual PowerPoint here. Let me find it. And so again, we're entering on a small test to the VWAP. So once it gets rejected and it comes back below it, we're entering on a small little bitty bounce to the VWAP. It's very similar to the strategy I talked about last weekend, which we're just waiting for a low to form underneath the VWAP, and then we're jumping in at that break. Very similar to that. Instead of on this one, you're actually getting in on a bounce, which is usually going to give you a little bit better risk, a shorter, tighter risk in the trade since you're getting in on that bounce. Another crucial aspect of this strategy is you're only taking 10 or 15 cents off the top. You're not trying to marry this move. You're really not trying to take huge positions and hold this one very long. You're trying to take a very small position, or not a very small position. You're trying to take a very small reward target and just getting in and getting out and taking your money and taking advantage of how high the accuracy is for this type of move. And so another thing, you can use the clear resistance above as a risk, and that's one of the big benefits of using this strategy. You can use this level as a risk. But again, when I look for a risk level, I'm looking for confirmation here. Let me erase this. Just like last time, I feel like John Madden with this here. Alright, so when you look for a reward target, you can set a very tight reward target like right here. You can see this low here. You can see exactly where the stock went was that low. And you can set a very tight reward target, but again, you're just trying to take advantage of this weakness right here. And so that's all it is. You're looking for a stock to get rejected below the VWAP. And honestly, guys, that looks really weak. When a stock's above the VWAP and it just has a bunch of red candles getting rejected, pushed all the way back below the VWAP, when you get a little bounce like this, it's really profitable to short into those bounces, anticipating that you're going to get a rejection like this, and you can make a solid gain from it, and it's a really easy high percentage play. So now that we have, does everybody understand the strategy? I'm going to go over it on demand in a second, but I want to make sure everybody understands the strategy here. Hey, I didn't know you were live on Saturday. Hey, listen, everybody's home. I usually don't go live on Saturday, but everybody's home. It's not like, usually I don't go live on Saturday because people are out doing stuff on Saturday, but nobody's out doing anything, and so we're live streaming on a Saturday. But yeah, I hope everybody understands that, and I hope that makes sense to everybody. I hope the strategy in general makes sense. Again, you can go back and watch me trade last week. You can look at my P&L at the end of every day and see that I ended green every single day again last week. Streamed it all live on YouTube, so where I can't fake my gains if I wanted to because it's all live on YouTube. And it was a really profitable way to approach this strategy. And so now that I think everybody understands it, Maestro, last week every day was green. Ended every day green, no losing days. I think I even have my TEFs up still. Like this was my Friday, right?
You're good though.
Okay, yeah, I saw it on YouTube. All right, we're back. But yeah, this is my P&L from Friday. I actually haven't exited out yet, but again, MU really profitable, AMD really profitable, and it was overall a solid day for me. But yeah, every day green, no losing days, streamed it all live, and it's been really profitable scalping the market lately. And so that's why I'm trying to share the strategies I use, because honestly, like traders get really weird with sharing strategies, but the reality is, it's like, look. The reality is, the more people that trade your strategies, the more profitable they're going to be, the more momentum that they're going to have. The more people that buy a breakout level, the more momentum it's going to have. The more people that sell or short at a low of the day breakout level, the more momentum it's going to have. And so people understanding my strategies makes it profitable, more profitable as well. And again, every day was green last week, and so that's why we're doing this live stream, just to teach people what worked for me. Not experts or gurus here. I don't want people to think we're experts or gurus, because we're not. I'm just teaching people what works for me specifically. It might not work for you. But with that said, let's go ahead and move on to the on-demand portion of this live stream, at least for this strategy. We're going to go over a few different strategies, team, and so we'll go over a few. Oh wait, let me exit out of that. Hey, nice gold. Hey, congrats, bro. Hey, nice Saiga. Hey, love you too, bro. Corey. Alright. Alright, so we're gonna go to on demand here and have some fun with this. Let me get my charts out. I want to make sure you guys can see my active trader. There it is. Alright, this actually looks like it'll work fairly well. I'll just have this up. Let me fix my green screen now that we're on demand. There we go. I got my green screen fixed, so now I don't look all crazy. Yeah, let's get this rolling here. Okay, so let me find the example I have of this. The first one I'm looking at is MU here. It's MU on the 15th of last week. So again, this one is from last week. Let me find it. So yeah, if you want to know what the date was, it is April 15th on MU. And it is a fake out fade scalp position. Alright, so let's go live here. Let me get this all ready so we can show you guys exactly what I'm thinking here and when I exit and get in. I'm just going to use market orders just for simplicity here, guys. And I'll probably just use a standard share size of 1,000 shares. Let's let it get up and running here. Okay, let me pause that. And I'm going to go back actually 1 minute. Let's see, we're back there. I can press play. Alright. So I'm going to actually freeze it right here. And this should actually work really well. Okay, so, again, what's the first step of this strategy, guys? What's the first step that we're looking for? The first step of this strategy is we're looking for a downward trend, right? We're looking for a downward trending stock, a stock that is maintaining below the VWAP. And you can actually see that MU here is respecting the VWAP. Every time it pulls back to it, it's getting rejected. And so it's maintaining below the VWAP. It's maintaining a downward intraday trend at this point in the day on April 15th. So now that we have this really strong downward move here, what's the next step in this strategy? Right? The next step in this strategy is we're just looking for the stock to slightly test the VWAP and break above it, forming a really obvious low. And so that's exactly what we get right here. We get a slight push above the VWAP. And then, let me clear this again. And then what do we get, guys? We get a really nice high up there that we can use as a risk level. We get a really nice high up there that we can use as a risk level. We're shorting with this position. And so if the stock breaks above that level after we short the position, we can understandably just exit the position. It's a really easy risk level. It's a really easy stop out level. And so if the stock, we're shorting, so we're betting the stock's going down. And if the stock breaks above that level, we're just getting out. You know, that's easy. Really tight risk level, very small, and we can give ourselves at least a 1-to-1 reward to risk ratio with this type of risk level. Now, again, what are we waiting for once the stock gets nicely rejected here? You can see one of the other keys to this strategy after it forms this low is we get a really nice rejection below the VWAP. It puts in a high up there, and then it gets really obviously rejected below the VWAP, which looks very weak. Now, when that looks weak, a lot of people are selling their long positions, which is going to drag the stock down, and a lot of people are shorting like me, which is going to drag the stock down. And so when that happens, we're going to wait for a little pop up here to this purple VWAP level. You know, you can see this purple VWAP level is right here, and we're just looking for a little pop up there to test it that we can short into and give ourselves really good risk and reward with a scalping style move. And so let's press play here. And we'll wait for that pop. You know, ideally it'd be 46.18, but if we don't get that, you know, that's okay too. We're just looking for a small little pop up to like at least 15 here. I gotta be careful I don't miss it because then I'm gonna have to rewind it. All right, there's 11s, 12s. Alright, there's 12s. Alright, there's the move. Alright, we got 15s and 16s here. And so we're going to short into this move. Now that we're in this position, again, we had the pop to the VWAP. This is the pop we're looking for. Right up to that VWAP level to test it. I hope everybody can see that. And so there's the move up to the VWAP. And then what are we looking for is just a nice quick rejection down. Alright, so we got the pop up to the VWAP, and again, what's our risk level in this case? Our risk level is right here. Our risk level is right at 23 cents. We have a very tight and small risk level that we can use in this trade, and then we can anticipate that we're going to get a rejection there, and that we're going to put in a lower high and get a rejection move at least down to the whole dollar of 46, and we're going to take profits. Really important levels that I use in these type of trades are half and whole dollars. Those are big psychological mental levels that traders base their trades off of a lot of the time. And so you'll see me use half and whole dollars a ton with these type of trades because, again, traders base their positions off of half and whole dollars a ton. And so, for instance, the whole dollar of 46 or 46.50, so forth and so on. Those are really important, really obvious levels that traders base their trade off of a ton, and they're levels that we use in our trading as well. The stop would be right up here at 46.23. 46.23 would be the stop level. Again, we put the stop in at this little tight little high above this level here. So we have the really nice tight stop level that we can base our trade off of. And then when we start to get into the profit, we can just get in and get out really quick here. And we can let it test, but again, our risk level is super tight. That we are not super concerned. If it pushes up and breaks that level, we can understandably get out of the trade, because at that point it would at least be putting in a higher high, which is a bullish sign. So when it puts in a lower high right here, that confirms our trade even more, and we can essentially wait. So let's give it some time. It just depends on what platform you're using. I use mental stops, but I don't really suggest anybody do that. You have to really know what you're doing to use mental stops, and you have to be very strict with it, because a lot of the time if you try to use mental stops, you'll kind of talk yourself out of getting out of the trade, which is a terrible thing. The big thing when you have a stop loss is that you just stick to that level. You don't try to talk yourself out of it. You don't try to justify not taking that level if it breaks. If you set yourself a level like that, you just stick with it. A lot of the time, new traders will try to justify staying in positions, and then the stock will just squeeze up more and more, and they're kind of like a deer in headlights. They end up just getting stuck, right? And so what you really need to understand is that if you're gonna give yourself a mental level, you need to stick to it like glue, and you need to respect it, because if you don't, a lot of the time you're just going to freeze up, and it's going to hurt your trading even more. Alright, so again, we got this really nice bounce up here. Now we got a really nice rejection, and we can just start to take profits into this level. We could take half off there, protecting our trade. And then we could look for kind of the same strategy before. We could look for that little low right here to break here as well. Maybe the whole $1.46 to break. Alright, so again, we can let this level test, and I'm going to fast forward it just to make it really easy on us in this time, just because we might sit here for a while. But this is the strategy I'm implementing, and I hope you guys understand what it is and why we took it. So once we get down to the whole $1.46, we could just plan to exit, or, at this point it's somewhat subjective if we get a break there. But ideally, we'd like to see a break underneath it, and we can just get out. $105 win. Again, we don't want to be super strict. We don't want to try to hold it and let it test. With scalping like this, you want to just get in and get out and be done. You can see you can make a quick little $100 doing that. And again, the big thing here, guys, is you want to be strict with your risk level. If it breaks this level here, it's time to get out. One thing you'll see me do is that I'm very strict with my stop levels when I'm scalping. But I actually have no problem jumping back in it if I think it still looks good, or if something changes on the chart and I think it looks good. And so while I'm strict with my stop levels, I don't mind jumping back in when I'm scalping, because again, sometimes I'm going to get faked out. It's going to happen, and you got to just judge it, play it by ear. It's subjective, but you got to figure that out on your own and understand your charting. Yeah, we don't have a $400 course, Sky. So like we refer people to like our platform, which comes with the course, but it's not our course and it's not our platform. Like, we're just affiliates of them. We don't actually have a course. We have a free course, Sky, on our YouTube channel. And so if you go to a playlist section, you'll see like a free class, like free classes like this. We've got a bunch of them. At this point, we've got like over 30, I think. But yeah, we don't actually sell a course ourselves, because we're not experts and gurus. We just teach people for free what works for us, if that makes sense. I'm using OnDemand, which is a thinkorswim tool that lets you go back and retrade any market day with a paper account. And so I'm just going over strategies now. But does everybody understand that strategy? I don't know if I would use it for swing trading. I'm not much of a swing trader, so I really don't know, Miguel. I'm mostly a day trader. So whether it's going to work for a swing trader or for a swing trade, I really don't know. But I hope everybody understands that strategy, and I hope that makes sense. I just wanted to go over that one. And then I do have one more strategy to go over here, and we're going to go back. I'm going to pause this, and we're going to go back to PowerPoint. Alright, so... Alright. With this one, I'll probably just end up using... I look like a cyborg in Terminator right now. But with this one, I'll probably just end up going over this exact trade right here. So this one is the double bottom low of the day break. Alright, I gotta fix myself here because I'm looking crazy. But so basically with this strategy, it's a really easy strategy, but it takes a lot of patience. Okay, so like if you're gonna trade this strategy, you have to understand you might not see it every day. It takes a very specific setup to happen for this trade to actually work, and you might not see it every day. But I think if you wait for this strategy to present itself and you only take instances of this strategy, it can be a very profitable strategy to implement. But again, you're not going to see this thing every day. It's not going to present itself often. But when not often, it presents itself fairly often, just not every day. And so if this is one of the strategy you want to trade every day, it might not work for you. But first off, we're waiting for a range to form here. In this case, you can see the range right here. We're waiting for a range to form, and then we're looking for the stock to start pulling back down to test the bottom of that range, the low of the day, the bottom of that range and the low. Once that happens, and you have a very obvious double or triple bottom, or however many bottoms you want to have there, when you see the double bottom or the triple bottom, you look to short once that level breaks. And so you're essentially waiting for a double low to break, or a double bottom to break. And you take, again, just like the last one, you're taking 10 or 15 cents off the bottom and you're getting out. You're not mirroring these type of moves because a lot of the time they'll move 10, 15, 20 cents in your direction, and then they'll immediately squeeze back up, and you don't want to get caught in that. And so let's look at a larger chart here where I stop looking like a Terminator. And so again, this is the example of it. You're looking for a low to form, you're looking for a range to form, and then you're looking for a really nice rejection underneath this range here. And so you're looking for a low to form here. Wait, what happened? Discard. I'm going to start it back over. I missed it. Alright, but yeah. So again, you're looking for this low to form right here. And you're looking for a range to form. Like you see this range here. You got a really obvious range. You're looking for a test of that level, so you have a double bottom. Here's one of the bottoms, 1. Here's the second one, 2. And so you have a double bottom there, and then you're just waiting for this momentum move underneath it, and you're shorting into that, trying to take 10 or 15 cents off the top. And so very easy strategy, but again, you're not going to see this one happen every day. It's not going to present itself every day in the market. And so when you're scalping like me, you kind of want to have an array of different strategies, right? Because sometimes you're not going to see the same strategy every day. And if you have enough strategies, you can kind of trade one depending on what you get, right? And so this is one of the ones that you're not going to see every day. You kind of need a choppy sideways trend, and you need a range to form. And then you got to be patient and wait for that low to break. How much money do I have to work with the short? A lot of the time you have to have 2,000, like Tiny said. It depends on the platform, right? Some platforms, the big thing with shorting is that you need a margin account to short with, right? And to have a margin account on most platforms, you need at least 2,000, and you have to request approval. And even with 2,000, you're not necessarily just going to get approved. They're going to look at your credit and stuff like that because it's basically like a loan. So funny, John. I only go long, and this is the same strategy I've been using. Hey, if it works, brother. You know, a lot of these strategies, it just depends on the trend. A lot of the strategies you can flip. Like the long strategy of the VWAP fake out fade is the rebound bounce setup that I talk about a ton, and it works super well too. But again, the key here is you want to wait for this actual low to break here. You need this here. You need this low right here to break. It has to break. If you don't, again, if you don't wait for this low to break here, you're just gonna get bounced out a ton. You're just gonna get faked out a ton. Like if you don't wait for that low to break, it's gonna go up and then down and then up and then down and then up and then down, and that can just eat up your trading account. You know, if you try to go short every time it tests that level, that can just eat up your trading account. It's a much safer way to wait for the break to actually happen here. You want to wait for this break to actually happen and then jump in. because that way you're protecting yourself, and you're usually going to have longs that cover, and you're going to have shorts that jump in, and that's going to give you momentum on the downside. But if you don't wait for the break to actually happen, again, you know, you guys have probably seen it, you can just get chopped out of your account like that, and it can just eat your account up. And so that's my suggestion, is to wait for the actual break to happen. But yeah, with that, we can go over the on-demand example of this one as well. Let's get the on-demand out again, shall we? And I'm going to go over that exact one, though, actually. Alright, so this one is on, if you want to follow along, this one is on April 9th at 9:14 a.m. So we're going to fast forward to this specific date. And so again, it's a very important thing to use here, is that, and honestly, if you go back and look at the previous day, you kind of see the same thing. It's not quite the same thing. But what do we get, guys? We get a range move right here. We get the stock to pull back below that range. We get the stock to go up, pull back down, kind of test that range. It bounces. And then when we finally get the break, we definitely get at least 10 to 15 cents. This looks like about 40 cents of a breakdown. So we get a little bounce here, and then we get a really nice breakdown underneath that. And so if you could essentially wait for this low to break here, you could jump in and take some profit off of these type of moves. And again, you can kind of see it happen the day before. And so it's not like it's an uncommon strategy. You just might not get it every day, and it really depends on the stock you're trading. You know, it's very specific to the stock you're trading. And so let's fast forward here and take a look at this. Okay, so again, what do we get? What's the first step? Is we're looking for a range to form with a really obvious low. And so we have this low here. We have the range. And now we're waiting for this low to break here. So we have the range. We have double bottom here. So we have two very obvious lows that we can use. And if we just delete all this and we draw out a line at these lows of the day, you can see they confirm really nicely. We have one confirmation here, and we have one confirmation here. And it's just a really obvious level. You know, this is my favorite thing to see in trading, because it's just a really obvious, easy level to go off of. It's super specific, it's super self-evident, and everybody else sees it too. And so that's going to give it even more momentum to work in my direction when I do short into this thing, right? And so we can press play here. The next thing we're doing is we're just waiting for this low to break here. We're waiting for the low at 48.75 to break. Again, I said you can use half and whole dollars, but you could also use quarter dollars, and that's something not everybody realizes, is that like 25, 75s, 48.75, 48.25, 50, you know, so forth and so on. Those are pretty respected levels too that not everybody realizes. Alright, so then once we get the weakness here, and we get some really obvious levels that we can go off of, we can wait for these levels to break. And then once they break like this, we can immediately short into it. And just look for a really nice breakdown. You know, the great thing about this is that when this happens as a risk level, you can use the previous level as your risk. Like once it breaks this, I usually like to give myself a few cents higher, but like you can see the confirmation here. Like these are really nice risk levels to use as well. So if they push above that level, you can just get out the trade. It's really easy. You know, and then once you get the breakdown, you just take a little bit off. Again, you're not trying to mirror this position. You're just trying to get 10 or 15 cents. And then once you get that, you can just really easily exit the position. Again, you're not trying to mirror these type of moves. You might get a further breakdown like this. It might further break down like this, but that's not what you want to bet off of, because again, just like this one might, you know, just like this one might follow through, a lot of the time you're just going to get a bounce back up here, like on a very quick move. You know, a lot of the time you're going to get faked out. And the reason why is because shorts are actually selling. They're covering their position, I mean. So shorts are actually covering their position. And when shorts cover, what happens? The stock moves up a lot of the time. You know, when shorts cover, get out, it causes a squeeze in the upward direction, because a lot of people are going to be taking profit with these type of moves. And so I hope everybody can understand these two strategies. Again, just like last week, really simple, really easy strategies that could be very profitable. You just have to be strict with yourself and be disciplined enough to trade them. Because again, if you're not, a lot of the time it's gonna eat your account up. You have to wait for the right entries. You have to wait for them to present itself. And you got to just wait for the strategies to be there. If you don't, or if you get too impatient, a lot of the time it's just going to end up kind of eating your account up. Yeah, I'm using the 1 minute chart with this one. No stress. Yeah, I mean, like I said, Maestro, I traded this one a bunch last week, man, and it was very profitable. Again, I'm not saying all traders should do it. I think giving yourself a risk level like this, right? I think traders that get stuck with this, right? A lot of the time, low of the day traders are buying it right here. So they're buying it right here. And so, like I said before, you got to wait for the break to happen. And you got to wait for the momentum to show itself. If you try to get in early, if you try to get in before this break happens, you're going to get chopped out. A lot of the time, people are buying reversal strategies at this bottom. And the reason this strategy actually works is that some traders are jumping in long right here. And then when this break happens, they're actually covering their positions, which squeezes the stock down more. That's why low of the day strategies work so well. Is because long traders cover their positions and short traders jump in. But again, the key here is you got to wait for the break to actually happen. And so, it's all subjective. Every trader's gonna take different strategies. Some traders are gonna take the opposing strategy, and that's fine too. But I think the key here is you wait for the double bottom and then you wait for the break to happen. It's not just shorting in at the low of the day. It's waiting for the double bottom to happen first. It's not just shorting into this low. It's waiting for this low to form here, and then shorting into that, if it makes sense. But again, I traded this one a bunch last week as well.
Yeah, I think a big part of doing this one was also you get a huge breakdown from that point that you're going to.
Right.
It wasn't like it steadily went down to that point. It was a fast move to that point,
For sure.
which creates usually a bounce back, which you got there right at the low, or
Right.
kind of fake to the low. And then there's a little bounce back, and then when it actually breaks through, that's big momentum pushing through.
Right. 100%.
So it's more of a momentum play. This
Right.
is just a momentum play down through that scout.
Right. And I can
got that high momentum.
Right, exactly. And I can explain why it works. It works for that exact reason, though, Maestro. Because, okay, so think about it like this, right? This bounce right here, long traders are jumping into it. Long traders are jumping in on this bounce right here. And so, they're jumping in, they're saying, oh, look, it's bouncing at the low of the day. We're going to jump in and look for like a VWAP test maybe, right? And then, I promise you, long traders were certainly jumping in here. And so when you get this rejection, when you get all these long traders jumping in and jumping in right at that bounce, and then you get a quick rejection back below that level, what do? You get long traders covering their positions. You get people selling. When this break happens, when this bounce happens, long traders are jumping in. And then when you immediately get this rejection, and that's why the double bottom, the triple bottom, or whatever is crucial here, and that's why I put it in the beginning of the PowerPoint, is because when this happens, long traders are certainly selling. They're covering their position, and so like Mitch says, what do you get with that? You get momentum on the downside. And again, you're not trying to marry the move. You're trying to take 10 or 15 cents off the bottom and get out, taking advantage of this momentum. And again, if you trade it like that, it can be very profitable. But if you're not patient enough to wait for the breakdown to actually happen, and you're not patient enough to wait for a double bottom here like this, then it's going to end up hurting you a lot of the time. And so you do got to understand that as well.
Yeah, like I said, at the end of the day, there's always an opposite trade to the best strategy. And that's what you're noticing too. It's not
Right.
negative what you're noticing. There's an opposite trade there, but that's
for
what
sure.
actually fulfills the trade.
100%. And so but again, listen, one thing I've learned in trading is that everybody's a little bit different. People trade different strategies, they trade different patterns, and if it works for them, that's great. You know what I mean? I can't hate on anybody else's strategy because they might be able to make it work where I can't. You know what I mean? They might be able to make certain strategies that I fail at work, and I can't fault them for it. I can't judge them for it. Obviously, the strategies I'm using work for me because, again, like I said, you can go back and look at my P&L at the end of every stream. At the end of every stream in the last, 4 months, and you can tally up how much I've made and then how often I'm profitable, and you'll see I've been incredibly profitable the last 4 months. Almost every day. Like last week, no losing days. The week before that, no losing days. The week before that, I think I had 1 losing day, and I streamed it all live to where I can't cherry pick my winners and just show people my winners. They can look at my P&L every single day. They can look at all my trades, and they do. And these are strategies that I have found to be extremely effective if you can wait for these specific points of them. If you're not patient enough, it's going to hurt you. But if you can wait and be patient with it, you can make money with it. I'm not using level 2 much. I use level 2 to determine the spread. But as for like walls on the level 2, I'm not much of a level 2 trader. I think that level 2 can be so easily manipulated. I prefer time and sales a little bit more, but even with that, I mostly just trade based off candlesticks and price action. Or not price action, candlesticks and, the VWAP and support and resistance that I've drawn out myself. But everybody's a little bit different. Oh, wait, I think Mitch is going to be doing one more if you guys want to stick around. He's still got one more strategy he's going to go over. So you want to take over, Mitch?
All right, let's go.
All right, let me put Mitch up, guys.
All right, guys. So now let's start taking a look at a completely different strategy. Like I talked about, for John's strategy, yeah, it's a high-speed strategy. If you can be disciplined, we've shown, you've seen John be green, I think now for almost 10 days straight. But and this shows that it's definitely profitable. It's just, can you trade it? And so what you got to do is always find something to match your personality. Maybe you're a person that likes more of a longer term trade. So this is going to be more of a longer time frame trade here. This is reversals, and really what you're doing on reversals is trading off the psychology of the greed. Every time that we trade, especially day traders, we push the greed. Why do we push greed, guys? It's because at the end of the day, a lot of us chase what's called momentum moves. We're looking for momentum because that's how we make our money, the volatility. At the end of the day, if there was no volatility in day trading, we couldn't make our money. So that's why we use reversals, and the reversals of the psychology when traders just get too greedy. And traders get greedy all the time because what happens is you see what FOMO's in everything, guys. Once you see something going one direction, you start getting too kind of crazy, and you get too out of your strategy. And next thing you know, you're chasing and buying tops, which is not the strategy that you were looking for to begin with. So when we do reversals, we're really looking for the extremes on the hourly. What I've really seen is that you're really looking on the 15-minute time frame to show you those double tops, triple tops, even sometimes 4 tops on the 15 minutes. That completes a whole hourly there that it's finding a top. And those are extremes. That's when we're really finding those extensions that really can't break through the resistance. So the stock actually leaves kind of no room but to pull back to a certain support. Sometimes this can be the VWAP, sometimes this could be further down than the VWAP. I chase these stocks down when they're at the top to the VWAP, or I chase them to the VWAP from the bottom. Sometimes you can get them to extend past that, but really the target is that VWAP. You can get out fully there or get out half and look for an extension. So the real key here is always to start off with minimal risk. I can't stress this enough. As I've been trading this trade, I realize more and more often that always that fourth of the position full size to start off with is the best position starter. Because when you lose on this trade, you can lose $10, $15, very minimal. Keep the trade small so that if you lose on that fourth of a size position, that by the time you actually go full size in a trade, if you even just become profitable on that one trade, you should be able to cover 4 of these trades that are minimal risk. And that's what's the important part, is it gives you essentially high probability as long as you stick to minimal risk first and then eventually sizing into your full size position. You want to use the 2 lagging indicators that I use. It's the MACD and the RSI. The MACD is a moving average convergence line. It's moving with the moving averages. So this means that you have to moving average traders, there's too many moving average traders, and that's why I really use the MACD. It's really showing me the relationship between the moving averages. The moving averages that it uses are the 9, the 12, and the 26. So I'll put that up in the chat because I know a lot of traders ask for that. The 9, the 12, and the 26. So it shows that relationship with those. And the RSI is a different thing. The RSI is showing you overbought and oversold. The levels that I look for overbought is anything above 80s, and anything that's oversold is 25. So usually overbought reverses down and oversold reverses up. So what we're really doing here is taking advantage of greedy traders pushing too far in one direction. This is the trade that you can actually add when working. And the real key is that you can actually even hold the trade continuously if that MACD continues to reverse and expand in the opposite direction. That expanding in the opposite direction is that relationship I talked to you about. That's what we're really understanding with the MACD, is the relationship between the moving averages, and that expansion just shows extension in one area. So this should continue extending in that one area. Yeah, the curls. All right, guys. So this trade is really all about being understanding that fearful when others are being greedy, and being greedy when others are being fearful. And this is really about taking that greed when others are being scared, panicking out. That's when we go ahead and we grab it. All right, guys, let's get into the trade. All right, John, go ahead and you could pull up the trade here. I'm going to lower down here so that you guys don't see too much of it, but that's kind of what we're going to get into. You guys see a little bit of me.
Oh, wait. What's the time? Oh, wait, it's April 9th, right? And then it's 11. Okay, got you.
It's 12:15 Eastern time, so and for John, it's going to show up at 11:15. This is going to be a long reversal. You want to have the chart on a 5-minute. And then eventually we'll move to the 15-minute. The two charts that I like using really to trade off of are the 5 and the 15.
Oh, wait, what's the stop?
It's Peloton.
Okay, PTON.
PTON.
All right, so you said April 9th, 12:15 PTON, right?
Mm-hmm.
Okay. All right. We're set.
All right. So the real key is here you can start drawing maybe some support line and resistance lines. Go ahead, John. You draw them out. I don't even need to tell you.
Yeah.
You could draw them out here. Draw the top, the complete top. At 29.
There we go.
So that we have like the top and the bottom.
Yep.
All right, guys. So then this is what we really look at. So the real key is this one already kind of reversed from the top, and it went through the middle. You could have actually already traded it there from the 29 down to the VWAP. But what now we're looking for is what we call the extreme reversal. A lot of times we get these full range trades. With full range trades, you can really nail these because they're going way too extreme in one area. Okay? So when we see this stock starting to, you can go ahead and just play it. It's fine.
Okay.
Yep. At 12 or 11:30 is when we're really going to start taking an entry more.
Okay.
But what we really need to see, guys, is a bottoming. So bottomings need to happen on the 5 and the 15. I really like to see a triple bottom on the 15 before I get full sized, but on the 5-minute, that's going to show multiple bottoms. That sometimes shows 4, 5, even sometimes 6 bottoms there. And really what we start getting here is a bottom at the 90s. Once you start seeing those bottoms at the 90s, you really want to see the RSI and the MACD kind of tightening up. I'll kind of show you guys that on my chart in a little bit. We'll kind of go over the MACD and the RSI itself during the trade, but let's focus on the pattern. The pattern gives more than enough here. So you see that bottoming here on the 2790s, and once you see at least 3 bottoms on the 5-minute, I want you to pull up the 15-minute and see, hey, is this reaching extreme levels? Are we reaching a double bottom on a 15-minute? And a double bottom on a 15-minute is essentially about, you got two blocks of these 3 5-minute candles. And that's kind of like this whole area where you get this bottoming at 2790s. Once you see that bottom, you at least have a risk, which is right underneath it at the 2780s or 2770s to go off of. But we're going to go in 1/4 of sizing. We're going to try to get in closest to 28 or 2790s, somewhere in between there. A lot of the times, this is going to spike really quickly. So you'll probably get your first entry at 28.
Okay.
So at 11:35, you can get in around 28. And so once we get that 1/4 of sizing, we want to go ahead and really just look for the bottom to hold. And the bottom's going to hold when we get either a triple bottom on the 15 or a double bottom on the 15. And we actually get a triple bottom on the 15 at 11:45 on this chart or 12:45 on your Eastern charts. Once we get that bottom there in that 1240 area, you're going to see at 1240 on the 5-minute chart, we actually break the resistance that's been created in that 5-minute pattern.
At what time? 12:45.
Yeah, so you can go at 1240. Yeah, you can put it at like 1240. And the resistance is at 2812s.
Yeah.
And you'll see it break through that. As soon as it breaks through that, that's when you want to go full size. That's breaking out of a 5-minute chart pattern and moving into a 15-minute breakout pattern, which really shows you that reversal, because if you actually look at the 15, you're going to end up seeing a triple bottom. Triple bottoms are always really great because what you get after that is a bullish engulfing candle. Bullish engulfing candles eat up the red candle on the 15. And when we get this breakout through the 2812s, that's when you want to go full size, and your target should be the VWAP first, which is essentially the resistance of that big breakdown candle that you saw there.
Right,
so you're riding it up.
Once this breaks, we're jumping in.
You see how you got in that triple bottom? This is the 15-minute chart you guys are watching right now.
Right.
Yeah.
You even
Once
have
you
this
break
here.
that. Yep. It's a triple bottom, and that it's going off the prior support. The triple bottom at a prior support, so you should expect at least a move towards VWAP. It could go all the way up, but the move to VWAP is highly probable. So once you break that 12, you can go ahead and go full sizing there. And now you're looking to sell majority of your shares at VWAP. You could sell 3/4. That's what I like to do at VWAP, because that gives me an opportunity to let a fourth go all the way up to the high resistance. Or I can just go ahead and at that point sell out the whole shares. And what I would do is I would sell out 3/4 of the position here at around 36. If it got to 35, I don't get picky, guys. I take it.
Right.
And that's the real key, guys. It starts breaking out on this candle of the 1250. We'll get that break to the 36. And I take some off there, and you actually get an extension to 2850, which thus lets us know that, hey, there's still some momentum in this trade. Let's keep in the trade and see if we can hold towards the low of those candles. So the low of the candle is now going to be your stop. You can continue riding up as long as the low on the 15-minute candles never break. And that also is going to show in the MACD, because in the MACD you're going to get an expansion, and the RSI is going to go from the bottom, which is below 25. It actually is down by 4 and 3, and it comes all the way back up towards the 100. And then those kinds of extreme swings is what we're looking for, really.
I'm gonna fast forward it a little bit.
Yeah, fast forward it so you can sell that half there.
Yep.
There you go. You can sell it to 35, and then if you want, you can just pull up my chart and I'll explain through it a little bit in depth for you guys.
Yeah, we're just going to sell a little bit early here and just get out so Mitch can explain kind of the rest here. So you can see how he's using this bottom right here as his support level. You know, we do have a lot of confirmation in that level, and then once this candle basically engulfs this candle here, once this candle breaks through this candle here, we get a nice little surge up to the VWAP, which is where he's planning to take profit. So I'll put his chart up now so you guys can see what he means by that. There we go. All right, you're up.
All right, guys. All right, so I see my chart there. Okay, so let me pull up here the hourly on that day. So really, guys, the hourly makes a big part of this trade, guys, is because the hourly at those points when it was up at 29 was looking like it was hitting a resistance on the hourly. And this is all the way going back until the 31st of March. So you see these highs here at 29.05 multiple times. So that's how I knew that, hey, that moved right back down from 29. That made sense. And then I looked for the support of that candle, that same candle, and that candle is right here. And you can see that 2790s right here. And that's what's really important on the hourly chart. So then you can see that bottoming, the same thing on the 5 and the 15. And that's the important part here, guys. And so that bottoming shows you multiple time frame swings at those levels. We're going to use minimal risk there and try to get the complete swing up to the VWAP and further.
Yeah.
So in here, we see those multiple bottoms as this really starts bottoming here. And I really don't get interested until I at least saw 3-5 minutes hold a complete bottom. So right here, I see this bottom here at 2790s, and I'm like, okay, on the next candle, if it holds that 2790s, let's try to start getting in here. It holds the 2790s. As soon as the next candle opens, this candle is going to actually open at 2794, and it's going to make a quick move to 28. Let's say we got in there at 28. Boom. We're taking the trade at 28 there. And that's really the big thing here, is that once you take that 28, you shouldn't see it break that bottom. Once you see it hold that bottom, go ahead and add in here, add in for the trade, looking for the breakout once you get that resistance breakout. That's how you want to take it in 3 levels, because that's going to give you an ability to have that maximum. At first, the risk is small. Eventually, what you're looking for is a huge move. It's usually 4-1, 3-1, and that's the important part of this trade here, guys, is that 3-1 and 4-1 looks are going to be the best probability for you to catch these reversals, as long as you start small at the beginning, so that if it goes down on you, hey, you lose on 50 shares for me, or 100 shares, and you lose 20-30 bucks in the trade. But once you're at this level, for me, it's like 200, 300 shares. And when I win $150, $170. And that, to me, I can use that accuracy to not worry so much about my entry. I don't have to worry here when I go in with 50 shares, because if I lose very minimal. And I can go ahead and shake it off and get into the next reversal trade. But if it holds, I can go ahead and add and continue to the trade, and that's going to go ahead and get me to a bigger profit by being that smaller trade first and learning how to add as the resistance breaks. And then once you're in full position, it's being confident enough to understand that, hey, at that point, I won't let this trade become a loser.
Mm-hmm.
And if you do that, if you understand that once you get full size, you no matter what won't let the trade become a loser, this trade can do you very well. And you can actually get these trades to ride up all the way past that VWAP and go all the way to the next resistance. So what I call the full range move. And the full range move, I mean, who wouldn't want to have a move that comes all the way down and then all the way back up? A complete V.
Yeah, a really good way to look at these guys would be like, so for in my trades, right? There's a balance that you have to understand with, specifically with accuracy and reward to risk ratios, right? With my trades, I'm taking advantage of a higher accuracy rate, but I'm being less strict with my reward and risk ratio because my high accuracy rate can compensate for that, right? And with Mitch's trades, he's taking advantage of a really good reward to risk ratio to where his accuracy doesn't necessarily need to be as high because the reward and risk ratio that he's having being 3 to 1, 4 to 1 is going to effectively compensate for maybe not having as high accuracy as me, but having much better reward and risk ratios. And so with longer term trades, that's usually what you get a lot of the time. And so I hope you guys can kind of understand the balance between reward and risk ratios and accuracy rate and understand, like, I'm scalping, so I'm taking advantage of a high accuracy rate, sometimes using like a 1-to-1 reward and risk ratio. But with Mitch, he's using a 4-to-1 reward to risk ratio, and so in turn, he has to be less accurate. He doesn't need to be as accurate as I do.
Exactly. And that's the real key here, guys. And then also understand the resistance and the supports hold a lot of the times. Look at this trade immediately afterwards. It hits the 29 and what happens? Right back down.
Right. A range move.
And this is what I want to show you guys. It happens all the time, and these are the ones I'm trying to trade. These full range of moves, they're a whole dollar apart. And then if as long as you keep your trade risk minimal at the beginning, let's say 20, 30 cents, 40 cents. I even risk sometimes 50 cents on 50 shares because that's only $25 that I lose on the trade. Even if I lose that, that's fine because if I get in the trade with 300 shares and I make, let's say 80 cents, sometimes I'm making 80 cents, a dollar on the first sell, I will risk 50 cents to make a dollar. Anytime, guys.
Right.
I've already realized that as long as I be smart and then I size into it and I'm making 3 times the sizing of that by the time I make a dollar, I'll take that trade.
Right. It's a safe bet, you know. All right, guys. Well,
all right, guys.
That'll probably be it for the day, guys. So yeah, we just wanted to keep this quick. We wanted to keep it about an hour, so we're right on time for that. Like I said, guys, if you want to, see more stuff like this, if it's your first time joining, we're not experts or gurus. We just teach people what works for us, the strategies we implement that, if you watch the stream, are very profitable strategies. Hit that like and subscribe button if you want to help support what we do here. We also have merchandise that you can buy. You can go check out the description of YouTube and just scroll down and see our merchandise. It's all great ways to help support our free content, which is all we put out here. It's just free content, and so we hope you appreciate what we do here. We should have a few videos that we put out tomorrow, and so hit that subscribe button and make sure to click the bell if you want a notification when we do put those videos out. Yeah, if y'all have any questions, let us know. We can kind of do what we can to break those down really quick. And yeah, guys, with that said, we're gonna enjoy the rest of the day if there's no questions. Also, go check out our Instagram. We have one called Unique Trading Patterns where we post kind of full screen breakdown pictures, kind of breaking down entries, exits, and stuff like that on our Instagram. You can check out the link there if you want to use them. If you want to use the same platform that we do that actually allows you to day trade with no PDT rule, I'll post that as well here, and you can check them out. A lot of benefits to using them. It's one of the cheapest ways you can actually short stocks with no PDT. Get a decent amount of buying power for like $400 or less. And if you want to check that out, here's the link if you want to.
Yeah, guys, and before we go, I'd just like to leave you with a kind of it's funny, but it's a quote that I got from someone that does performance coaching for hedge funds, and they've really said that in this era of algos that we have to face the computers so much, and I kind of believe what she says. You have to look at trading a lot of the times as either really short term, like John's trading there, those scalps, or a little bit on more longer term, like I am, almost trading the hourly chart. And I think that's probably going to be the best ways to really kind of beat the machines, because you beat the noise in between.
Right.
And I kind of agree with that quote. And these strategies actually are big towards those, either really quickly because I'm beating the computers, or I'm going to outsmart them because I see the levels right off the chart.
Right. Yeah, for sure. All right, guys. See you,
guys. If there's no question, you guys can always keep up.
Appreciate everybody joining us today. We should have a few videos out tomorrow, so make sure to hit that subscribe button. yeah, guys, hit the like button if you want to help support us. Fun class, and we'll have some more content for free out tomorrow. So later, team. Have a good day, and we'll see you guys next time.
Yep. Like always, guys, hit the like, hit the subscribe. See you guys.